Welcome to Tete-a-Tech. From day one, we've been organizing hundreds of events, private meetings to enable meaningful conversations and connections within the Silicon Valley Brazil innovation community. Over a year ago, we launched this series, Tete-a-Tech, to encourage dialogue and knowledge sharing beyond face-to-face, beyond borders. So we've been hosting leaders and discussing topics that are relevant to our tech hub. So thanks for joining us. This is your space. Send us questions, suggestions, and let's keep the dialogue going. Today, we are focusing on how this pandemic, this COVID-19 pandemic, impacted the startups' abilities to raise seed funding. For that, I'm joined here by three investors. They are Amit Garg, managing partner at Tau Ventures, Carol Strobel, operating partner investor relations at Redpoint Ventures, Rafael Costa, general partner at Vulcan Capital. So to just situate here the conversation, I'll ask our guest speakers to introduce themselves, talk a little bit about their firms, and then I'll ask a couple questions here, and then we are going to include your questions. We received a number of questions from our members, both in Brazil, Silicon Valley, and elsewhere. So thanks so much for joining us, everybody. Let's get started. Amit, please tell us where you are, a little bit about your background, and what is Tau Ventures?
Sure. Margarese, before I get started, just want to say a quick thank you. First to you and the team at Bay Brazil. I remember when you started 10 years ago, and here we are. You have put in so much work building this organization. So kudos to you for bringing us all together. Sonho grande.
Thank you.
Fulfilling it.
Obrigada, Amit. That means a lot.
Of course. And thank you to Carol and Rafael. Look forward to the dialogue, learning a lot from you guys. And thank you to all the audience. I think the vast majority of people logging in are in Brazil right now, and it's 7 p.m. So really thank you for joining us. I am capixaba, candango. A gente está falando inglês porque tem gente que não fala português. I've been in Silicon Valley now for 20 years, and I've done a number of things here in the Valley. I used to work at Google for many years. I ran my own startup called Health IQ. I've been a VC in 2 different funds, and I've started my own fund as of August of last year. It's called Tau Ventures. We do seed investments. We are a deep tech fund. We focus on applied AI in 3 verticals: digital health, enterprise, and automation. We define automation as cars, drones, and robots. Our portfolio is all online. There's 10 companies. We have just done our 11th investment. We're looking at US and Canada, so we're not investing directly in Brazil, but we're very much open to investing in entrepreneurs that may be from anywhere in the world, but based in the US and Canada, and having a team outside. So we've actually invested in a Brazilian. Her name is Cristina Lopes. She runs One Health Company, which is focused on detecting cancer in dogs and helping treat the dogs. So I'll pass it to Carol, I guess, to share an intro.
Yes, thank you, Amit. Yes, Carol Strobel, please tell us a bit about yourself and your firm.
So good night, everyone. So first, let me thank you, Margarese, for such a fantastic work and all the efforts of bridging the Silicon Valley and the Brazilian community. Thank you so much. And thank you, Amit. Thank you, Rafael. It's going to be a pleasure to discuss all these matters with you today. My name is Carolina. It's a great pleasure to be with you and to discuss a little bit about the pandemic and the VC and the venture capital market. I'm a partner at Redpoint Ventures. Redpoint Ventures is a venture capital firm focused on technology. We invest in Latin American startups. We have a very close partnership with 2 Silicon Valley firms, eVentures and Redpoint. We manage over $300 million. We have over 48 investments in Brazil in the portfolio. We have invested in some unicorns, Gympass, Happy, we have Creditas, Pipefy. The firm co-founded Kubo. For those that don't know, this is the second largest innovation hub in the world. It's based in São Paulo, and that's where we are, or we were headquartered, we don't know. At least that's what we had 9 weeks ago when everybody went to home office. So that's it. Let's have a great chat today.
And you are joining us from São Paulo.
Yes.
Yes. Thank you, Carol. Rafael Costa, tell us a bit about yourself and your firm.
Absolutely. Well, good afternoon, everybody. Good night for those in Brazil. Mauricio, thank you very much for the invite and opportunity to speak today. Amit, Carol, it's going to be a real pleasure to have the discussion with you today. Just by way of background, I'm a general partner at Vulcan Capital, as Mauricio alluded to. Just to give you a little bit of additional context of who Vulcan is. We were founded about 20 years ago by the late co-founder of Microsoft, Paul Allen. We effectively manage what is now his estate. So you can think of us as a single LP fund. We are a multi-billion-dollar fund. We manage north of $10 billion. We have a diversified strategy as to how we go about investing that capital, which really ranges all the way from seed stage investing on one end, all the way through public equities, as well as fixed income and real estate. I help to lead our growth equity effort out of the Bay Area, our Paulo Alto office globally, which really means we have invested across all emerging markets, ranging from Brazil as of late, where we have been spending a considerable amount of time. I led the Series C in Loft down in Brazil. We have just announced another investment. Actually, we just made another investment in Brazil that has not been announced quite yet, and in other regions across the globe as well. So we invest, predominantly in technology, ranging from enterprise software to consumer tech to what we describe as frontier tech, as far as the third bucket is concerned. Typically, we're writing checks all the way from a couple $100K all the way to $200 million on a per deal basis. In parallel to that, when I started investing in 2011, I started investing in Brazil, and I think I caught the second wave and was very lucky as an angel investor, investing in the likes of Gympass, Banco Fácil, which went on to become Creditas, more recently Happy. So that was my first foray into Brazil as an individual investor, and that helped me build the conviction to go out and do that institutionally via Vulcan Capital. And I helped to start and found an early stage fund by the name of One VC, where I serve as a venture partner and advisor. And that provides us with a very good vantage point on the local markets. And I leverage that to do some more of the growth stage investing that I do here at Vulcan.
Excellent. Wonderful. Love the different backgrounds and the experience you bring. So I thought we would start giving our audience a chance to hear your vision of what's going on here in Silicon Valley and what is going on here in Brazil in terms of VC investing. Last year, Latin America reached a record high in VC funding, as you know, 4.6 billion. This is more than half of the year 2018. Of course, now there are expectations that this will be highly impacted and there will be no record, unfortunately, this year. Is this true? Tell us a little bit about what is your sense of what's going on right now, and if you are hitting pause, or are you still doing deals? Amit, why don't you start?
Sure. Well, Mauricio, you're absolutely right. This year is definitely not going to be a record. It may be a record in the other way. Here in the US, for folks who are watching the news, we are hitting record unemployment. It's probably close to 20% by the time the crisis fully goes away. It's the highest we've had since the Great Depression. The markets have been keeping relatively stable. If you look at NASDAQ and Dow Jones, they're actually only about 10% lower than what they were before the crisis. But we do have a very big downturn in consumer demand. And what that ends up affecting is obviously the amount of money that LPs put into VC funds and that what VC funds put into startups. So the whole engine has gotten a little bit slower. We have seen this already. We just did our first deal of the year 2 weeks ago. And when we had started engaging with the entrepreneur, the terms that were being discussed were X, and what they're being done now is essentially half of that. So the valuation essentially dropped to half the amount because of the crisis. Now that's maybe an unusually high drop, but we do expect that for the next year, year and a half, valuations will keep coming down. And we have seen this in previous crises. If you look at 2009, 2008, at that point, it took about a year, year and a half of valuations going down before they started to recover. The good news is that seed investment is the one that recovers the quickest. There's a lot of data historically on that. If anybody's curious to investigate these topics further, I write a lot on LinkedIn, and I've written about these topics in the last 2 or 3 weeks, and I've linked it to a lot of folks who have written at much more length. But to get to your final question, Margarese, funds are open for business. It's not like funds are not doing anything. In fact, I think all three of us in this call are doing deals as we speak. The difference is funds that are more established, they have portfolios that they have to maintain. And the bigger the portfolio they have, the more capital they are conserving to manage and help their portfolio companies. So for anybody who is an entrepreneur in the audience, if you're looking to raise, go to funds that have raised recently, because that means that they have more capital that they haven't deployed yet. And look at who is continuing to invest. We have seen of ourselves that about half of the funds have retrenched. There's another half of funds that is still very much active. So it's become harder, but it's certainly not at pause. It's just slower.
Great. Well, continue on the Silicon Valley view, Rafael. Tell us what are your perspective. Are you guys hitting pause, or deals are keep going at Vulcan?
Yeah, I mean, we're actually quite active. I think I'm probably busier now than I was in the beginning of the year, in part due to portfolio work. So, you know, once the crisis hit, our number one priority was portfolio to begin with. And then now we're shifting away from portfolio and moving into how can we play offense. Obviously, it's an extremely fluid situation currently. I mean, I think Amit put it very well. If you move down the stage into earlier stage, I think that activity will remain quite elevated. If you look at data, which I think is a good way to go about it. If you look at both the financial crisis as well as the dot-com crisis, deal count during those years went down by about 70-ish% or so. Valuation went down by about 60%, and this is across the asset class. I'm not kind of distinguishing between early stage, growth stage, or late stage. This is really across venture capital as an asset class. I think what we will see is something that resembles that, and this is going to be highly dependent on what sort of recovery. You know, you pick your letter. V recovery, U recovery, L recovery. I think to some extent that is not, we don't have a consensus view on that quite yet. I think our house view is that there will be a second wave. So we are preparing for that. But to answer your question very directly, we have remained active. I alluded to the fact that we just closed the investment in Brazil, and that was post-COVID. So that speaks to our appetite to do new deals and do deals in geographies, whether we want it or not, are more impacted or should be more impacted than the U.S. is. I mean, there's a saying that goes, if the U.S. sneezes, emerging markets catch a cold, and I think that's certainly the case. That being said, with a lot of dislocation in the market, there comes a lot of opportunity, and that's exactly what we're seeing. I think a lot of folks are talking about the speed in which things are changing from a tech penetration standpoint, whether you want to look at e-commerce and consumer habits, or whether you want to look at, you know, cloud adoption and, you know, AI, as Amit pointed out. I think what we'll see is you have had numerous people talk about this, things that were supposed to happen in 5 years happening in a matter of months. I mean, their portfolio company of ours that have exposure to e-commerce, to give you a specific example, they're seeing record levels of demand. And we're talking about daily demand that's the tune of what they saw on Black Friday or Cyber Mondays. So yes, we're playing offense. We're being very active. I think in Silicon Valley, most funds are being active. I think the only small caveat being meeting folks over Zoom or meeting entrepreneurs over Zoom, it's difficult. So what I mean by that is a lot of the deals that you're seeing getting done now are deals in which you had a pre-existing relationship with the founder and the founder with the investor.
So nothing substitute the face-to-face, Rafael?
I find it hard. I'm not gonna lie to you. Personally, I don't feel necessarily 100% comfortable. And frankly, I think the entrepreneurs shouldn't either. I mean, the reality is this is a long-term relationship. You're not going into an investment thinking, this is going to be, and there's certain investors that think that way. We certainly do not. Whenever we're partnering with a company, we're partnering and looking in terms of decades, not years. So to make a decision like that without meeting face-to-face, without meeting the rest of the team, without going to the office and seeing what the atmosphere of the office looks like, getting an appreciation for the culture is difficult. I know there's a lot of VCs that say they're writing checks over Zoom. I just want to be complete. We're not doing that. These are pre-existing relationships. We're open for business, and we have actually met with entrepreneurs, but with 6 feet apart. We have done physical meetings actually already with companies, but with social distancing. So let me pause there, but I think there's a pause, but there's an activity, especially in the last 2 weeks. We have seen a massive pickup in activity from a deal standpoint.
Interesting. Carol, give us your perspective on how Brazil stands at this point.
So just to provide some background about what's going on in Brazil right now, we are under a heavy impact as we face not only a health situation as well as a political crisis at the moment. So up to today, we had, I think, 14,000 deaths. But data is not exactly reliable, as Brazil is one of the countries with the lowest amount of tests being made per capita, being deployed by capita. But what we can see is actually that aside from this health situation, we are including closures, mobility restrictions. So it is a very different situation for everybody. We look ourselves as if we are a week behind the US. That's what we believe, but it's difficult to say right now. At Redpoint, we worked intensively in the early beginning to make sure that our existing portfolio had all the support that they needed, because the challenges were different to each company. So some very important and time-sensitive decisions needed to be taken. And we were there to help out our portfolio. We changed a little bit our process as well to make sure that the cash flow for each of the portfolio companies would be addressed. We saw many good things happening. We saw our companies focusing on different products, pivoting fast, had a good number of companies being actually having some benefits out of the crisis. And now we have gone over that, and the team is now being able to focus more on fund strategies. And with the gradual quarantine release that we believe will happen, there is a belief that we're going to have some optimism bubbles that will emerge, and that we want to get ready for that. So the new normal, we believe in the new normal, and we think that technology will be the tool for that. The solution for most of the issues in this crisis. I think that new technology can position the fund to generate very positive returns to our LPs. And as you know, there are some studies that say that innovation and technology, they actually speed up in most of the crisis, and that's what we believe in. So there are lots of opportunities going on right now. And we believe there are several unicorns being raised at the moment in Brazil. So we believe in the Brazilian ecosystem. It is very robust. We have angels, we have VCs. I think that the ecosystem per se is ready. The appetite is sort of reduced. A partner of mine reminded me today that during a crisis, investment is a ratio of fear and greed. And of course, the VC funds can get away from this emotion and actually look into this as an opportunity, you know, and see the behavior change as a chance of doing something different and change and transform the world we live in. That's what venture capital is about in the end. And so that's what the crisis do. We have been closing deals, yes, and some with the same
you
valuation.
are closing deals despite the pandemic.
Absolutely. And not the deals that we have committed before, definitely they have been kept. All the commitments we had before have been kept under the same valuation. And we believe that there are going to be some adjusts to valuation naturally, because the market is going to adjust and the industry is going to adjust as well. So the companies that go through the process of the crisis and get away from it, you know, get on the other side of the tunnel, they're going to be winners, and we want to bet on them. Of course, we are worried about our dry powder and, you know, the money we have to support our companies, and we keep looking into this, you know, frequently. But also, we believe this is an opportunity that we cannot miss. So we're looking into this as well.
Thank you, Carol. I want to remind those of you joining us that if you are not a speaker, please mute your, push the mute button for us, please. So I have more questions, but I see that we have more questions coming through our chat. I want to get to those, so I'll jump and ask some of the questions that we received from you. Hans Bukal of America Europe Consulting asks, what are the top 3 most important seed investment criteria changes that have occurred as a result of this pandemic development? Amit.
Sure. We are a seed fund, so this is very much what we have spent a lot of time thinking and strategizing around. So the fundamental factors in terms of understanding the team, the market, competitive landscape, technology, product, all of those obviously are the same. What has changed is we're focused on finding companies that can keep their burn a little bit lower, and that can raise for a little bit longer. So typically we were looking before the crisis for companies that were raising for maybe 18 months of runway. Now we're really focusing more for 24 months of runway. And if they happen to be raising for even longer than that, that's a bonus. Obviously there's a limit. You don't want companies to be raising for 48 months of runway, because at that point, you're shooting yourself in the foot. You will also miss out on the economic recovery. So I think the sweet spot is probably between 24 to 30 months of runway. That's one change. And in terms of burn, this obviously varies based on industry and varies based on where you're based in terms of geography. But let's take the Bay Area. Silicon Valley is an example. You can think of it as maybe a team of 10 people is spending maybe 100K in terms of burn rate per month. Like that's a reasonable amount, right? 20 people spending 200K. So we benchmark any new company that's coming to us based on everything else that we have in our portfolio and within our pipeline. And the third big change is we want to make sure that the syndicates that are being built have strong names around them. Because if something happens, if let's say the second wave that will hit, we also believe that there will be a second wave, ends up being longer than expected, the economic recovery takes longer than expected, then we want to make sure that there's enough capital around the table to be able to support those companies. And realistically, tactically, what that means is that we want co-investors that have deep pockets. What we're seeing increasingly is larger funds are coming more and more early stage. So they come into the Series A and sometimes in the seed, and we're very friendly towards that. If there's a fund that's $200 million coming into the seed with us and being a co-lead with us, that's great. So we're becoming more and more friendly towards having that kind of structure in the seed round.
Got it. Carol and Rafael, any comments on this? The top 3 most important seed investments criteria changes with this pandemic.
Carol, you can go ahead. I think I may cover it all. Nothing from my end to add.
Okay, so going to another question from Cristiane Lemos of Elton Capital. How does the exchange rate move impact the ability of startups to get funding? I think Amit mentioned that today is closer to 6, the exchange rate. Amit, is that correct? I hadn't seen.
Yeah, for those who speak Portuguese, goleada.
So how does that impact, Amit?
I think Carol may be able to add most light to this because she's based in Brazil, but very quickly from my side, if you are a foreign startup or based outside of the US, then you can adjust to the new normal and hopefully take some advantage of it. The fact that the dollar is worth more means you can do more exports, right? So it's whatever you export will end up being more currency for you. So there is some opportunity despite this bad news, but I'll pass it to Carol.
And just for you to answer this, Amit, as an investor, does a Brazilian startup becomes more attracted to you because of the exchange rate?
Well, so I personally don't invest in Brazil, but in general, yes, absolutely, because it goes in line with exports becoming better. It also means that you become a more attractive candidate for investment. Now, in the very specific case of Brazil, I think Carol was mentioning this, the country is going through the perfect storm, right? We have a health crisis, we have a political crisis, we have an economic crisis, and there's a country risk. And that will mean that a lot of investors, foreign investors, will be hesitant of making investments outside of their jurisdiction. So realistically, I think it means that people who are already in Brazil, Redpoint, for instance, which is a joint venture, or Kaseki, or Atomico, or Valor Capital, like all of these funds that already have established presence in Brazil, they would feel more comfortable saying, okay, you know what, this is an opportunity. I know this place, I know this country, I know what I'm doing. I can manage this roller coaster.
Carol.
So yeah, what I think is it depends where the company is based, where the startup is based. But generally, I think that term sheets that were negotiated, for instance, in dollars, are now going to be might have to be drafted in reais from now on. And it makes sense because the companies, if the companies are in Brazil, their risk is in Brazil, so it doesn't really, it doesn't really make a difference somehow. So, and if you really consider that if you had a certain amount of money last year, and you will have the same amount of money this year, you will have much more this year because you have the opportunity this year. This year, you have less competition, and if you have cash, cash is king at this point. So I think that the valuations are going to suffer a little bit exactly because of the foreign exchange rate. But that's it. I think that, the Brazilian entrepreneurs are quite used to the risks and to the crisis. They know how to manage very well cash flow and the risk they face. So I don't think this will stop the Brazilian companies.
Great. Rafael, any comment on that?
Yeah, let me perhaps add a few different views here, which I think are important, both from a macro standpoint as it pertains to Brazil, as well as a foreign investor investing in Brazil. So if you look at the currency on an annual basis, dating back to a decade ago, the BRL versus the dollars has devalued on a really nominal basis about 10% a year for the last decade. On a real basis, if you take into account inflation, that is not as bad. What Brazil is living through nowadays is a relatively low inflationary period, which is quite different. Obviously the currency has moved the most it has in history in the shortest period of time ever. So we have seen the BRL devalue versus dollar, about 40% plus in 2020. So what does that mean for companies in Brazil? What does that mean for foreign investors investing in Brazil? One, for a company in Brazil, I completely agree with Carol. I think the deals in Brazil need to be priced in BRL moving forward. That's just the reality. We got to get away from pricing deals in Brazil in US dollars, right? Two, I think what you see is companies that got rounds priced in dollars. The reality is you just devalue by 50%. So for you to be able to overcome this, you need to grow double what you were expecting to grow in order to raise an up round, right? So what you probably will start to see is a lot of flat rounds or even down rounds, just purely driven by the currency. I'm not even getting into the macroeconomic side of things, which that's a whole different situation. So what you see is, I think, in this coming vintage, you'll see a lot of flat rounds driven by currency. What you see is, frankly, a lot of foreign investors just put Brazil in the back pocket because just the currency risk alone is quite high. And I think that the risk for the foreseeable future is going to only increase. Currency is a very hard thing to predict, one of the hardest things from a macroeconomic standpoint to predict. But the risk skews to the downside here, especially as we look for the remainder of 2020 and 2021, driven by political reasons, fiscal reasons, macroeconomic reasons. So I think that's just the reality of it. The flip side to it is something that I talk a lot to Brazilian entrepreneurs, and one of the theses for us for Brazil to some extent is companies that are born in Brazil, but they sell internationally. I think Pipefy is a great example of that, Carol. Gympass is another prime example of that. These are companies that were born in Brazil, but their revenue, for the most part, whether it be 50% plus, are actually US denominated revenue while your costs are in BRL. So all of a sudden you have an equation which makes a whole lot of sense because your cost just got cut in half, or in other words, your revenue just got multiplied by 2, just purely driven by a currency. Another interesting factor that we, as Brazilians, got to pay attention to, which I think is going to be quite interesting, we're starting to see this, is companies from the Valley in the US, and this ties into some of the themes we're observing via COVID, hiring engineers in Brazil, because all of a sudden it's extremely cheap to hire talent in Brazil driven by the currency. It's cheaper than it already was. So there's a multitude of companies I even spoke in the last 2 weeks that are setting up shop in Brazil to hire talent. I mean, Cordero, Peloton, there's a bunch of other companies that are setting up shop in Brazil as a means to attract good talent at very attractive cost. So I think the reality is, just to sum it up from a currency standpoint, it's just the reality. If you look at just the BRL is the worst hit emerging currency that got devalued the most across the globe. I think the risk skews to the downside, but there are opportunities in the light of the tunnel for companies. And I think hopefully it encourages Brazilian entrepreneurs to start building global companies from day zero. I think that's the real, subliminal message in there, I would argue.
Kevin Lemon from MBF Global Inc. What are typical valuations for seed stage companies in Brazil versus Silicon Valley? Carol, would you like to respond to that?
Well, valuations, they change a lot. And even during seed stage, the best valuation is actually the money the company, the best round is the money that the company actually needs to move forward. And it's very hard to evaluate a company when it's at seed stage. What we consider at Redpoint Ventures as seed stage deals is around 100K to whatever, maybe sometimes even $1 million. It depends on what the company, which is the capital need of each company. So it's hard to say. So there's not a rule for that. Sure. There's not a framework for that.
Sure. Amit, any comment on that?
I agree with Carol. It's very hard to have a rule around it. I'll offer a framework that we think of at Tau Ventures. Pre-seed is a PowerPoint. It's 2 or 3 people with a PowerPoint. A seed is a prototype. A Series A is product market fit, and a Series B is your business model is taking off. So it's not so much the amount of money that you're raising, it's what you're using that money for. And if you're using $1 million to take your prototype into product market fit, that's a seed. But if you're taking $1 million to grow your business model, that's a Series B. So I think a lot of people get hung up by how much I'm raising. It's not that, it's the use of the capital. The second part of that framework is, roughly speaking, obviously this varies a lot based on industry and geography, but roughly speaking, you're diluting yourself 20 to 30% in the seed. So you can backtrack that way. If you're raising, let's say, $1 million, then you're looking at a valuation probably something along the lines of 4 to 5 million post, or maybe it's a cap of a convertible note. In a Series A, you usually also dilute yourself 20 to 30%. In a Series B, you're diluting usually something a little bit less, more like 15 to 20%. And at a pre-seed, the notion of dilution is really hard. So at least the norm in Silicon Valley is to do a convertible. I think that is becoming increasingly the norm around the world, including in Brazil. So pre-seed, I would say, despite the crisis, stick with the convertible. At a seed, you can start doing price rounds with that 20 to 30% guideline.
A related question, Fabio de Paula from Indicator Capital. How much it changed the perspective for exit for the seed stage funds? Rafael, you want to comment on that? The perspective for exit.
Mauricio, I apologize. You broke up when you were asking the question.
Sure. Fabio de Paula from Indicator Capital is asking how much has changed the perspective for exit for the seed stage funds.
Yeah, I think in terms of exits, it's really irrespective of seed stage funds and exit. When you look at exit across the asset class in terms of liquidity as a whole, there's no doubt about that. We won't be seeing a whole lot. The IPO window is completely shut or largely shut. We have not seen any IPOs on the tech side price since COVID broke out. My expectation is if the volatility in the market remains this high, we probably will not be seeing companies going public for the foreseeable future. Just not an optimal time to seek liquidity, which really, what does that mean? That means, liquidity gets pushed out. Again, if you go back and look at empirical data, when we had this sort of big recessionary periods, whether it be the most recent financial crisis or the dot-com bubble, obviously liquidity becomes a scarce and exit gets pushed out. That being said, on the flip side, I think what we'll see is some more M&As. M&As will certainly pick up. We certainly have portfolio companies that once we started playing defense and we feel very comfortable with the downside case scenario, now it's time to start playing offense. So the companies that are well capitalized and were, quote unquote, one of the leaders in their markets, they have a very big window opportunity to further consolidate that market, further emerge stronger from this. So we'll see a big pickup in M&A, both I would argue in Brazil and in the US. So that would be a path of liquidity that we'll see a whole lot more than path of liquidity via the public markets. I'll go as far as saying another data point. If you look at just cash balances on just the tech sector as a whole, and we're talking about the Apples, the Microsofts, the Facebooks of the world, they are at all-time highs. So they will be starting to deploy some of that cash and capital in accretive ways, which is via M&A, and picking up companies all the way from early stage and truly acqui-hires, which I think is actually quite interesting, to things that are a little bit more bolt-on to very big M&As. And I think we'll start to see that as well. So I think, just to summarize, public markets are shut, so we probably will not see many IPOs. Well, we'll start to see some more M&As. And as we look in Brazil specifically, I would love to see more M&As that's cross-border in nature. We saw some of this via China in this last wave, and I thought that was quite encouraging, especially as foreign investors. One of the knocks on Latin America and Brazil was the lack of liquidity that we had in that market. And we saw a big window of IPOs that took place. I mean, the likes of Stone, XP, Arco just went public, and that encouraged the investors a lot, as well as some M&As that took place with Chinese coming into that market. And I would love to see more of that. And I expect that to continue to be the case.
And Fabio, just to say a little bit about Brazil, I think we are again back to those times where we work together, and we actually had no public market in Intel Capital, and we were looking into the large tech companies to acquire some of our portfolio, small portfolio companies. I think we're back to that time, at least right now. It's difficult to say how this is going to evolve, really, but that's what we're seeing.
I'll second what Rafael and Carol said. Here's the good news. Seed stage is the least correlated with public markets. There's tons of data on this. Seed recovers the quickest. Seed is usually a 10-year horizon. That's why VC funds tend to be 10-year funds. And usually a seed company has an exit somewhere between a Series B, C, 4 to 7 years after they got started, unless they're going really for an IPO or a really big exit, in which case they go 10 to 11 years since they got founded. So if you believe, like I do, that this is a pandemic, it's a pretty bad pandemic, but it's not the first, it's not the last. We've had previous pandemics, and pandemics last 1 to 2 years, then the world will recover at that point. And the companies that are seed today, they will survive, not even survive, thrive, because they will be able to be more cash flow cautious. They'll be able to aggregate better talent, and they will come out of this crisis roaring. You can look at what happened in 2001. That's what created Google. That's what created PayPal. So we are bullish on the long term, bearish on the short term. So I call it the bull case amidst the bear market.
And talking a little bit now about the sectors and combining a couple questions here that we got. For example, Marco Vorá from Intel is asking which verticals are the most promising during and after this crisis. What is your sense? We've seen in Brazil especially heavily regulated industries such as healthcare being disrupted right now. So tell us a little bit about the sectors that you think will benefit or are your favorites before and after. Rafael.
Sure. I think I'll speak with two veins. I'll speak on a global basis, and I'll hone in on Brazil as well. I think some of the key trends that we have observed and remain quite bullish around revolves around, I'll say, software first and foremost, and the key themes that are automation, it is cloud, DevOps, and security specifically. So we'll see, digitalization pick up quite a bit, and we're quite bullish there. Secondly is e-commerce. So I think e-commerce is quite interesting in terms of, even in the US, e-commerce penetration is still in the mid-teens. I think once we come out from this crisis, we'll probably be in the 20s. Then digital health and education. I think those are all sectors that we like and themes that we like. I think everyone talks about remote work. I think that's an obvious one that is certainly going to pick up and has been picking up. We're doing the Zoom. And then in Brazil specifically, I think that's right. I think heavily regulated industries, and we're seeing this already. I'll let Carol comment on it because she's certainly closer than I am. But we're already seeing telehealth being kind of deregulated. We've seen, pharmacy prescriptions being able to be done digitally, which was, prohibited beforehand. I invested in a company personally called Docket that sits on top of what is cartórios, right? Go explain to an American what cartórios is. That he's probably not going to understand it, but it's just that's the reality of
Good for
the
him.
country we live in. in
Notaries, you can say notaries.
In Brazil, yeah. And I think there lies the opportunity in Brazil too, is for technology to tackle a lot of these bureaucratic processes of the Brazilian economy. And I'm actually quite excited for the entrepreneurs that are tackling exactly those problems.
Amici or Carol, jump in.
Sure, I'll pick up what Rafael was saying. I agree completely with him. Health is a no-brainer. We at Tau Ventures, incidentally, have been investing in health since the start, and over 50% of our portfolio is health. And our view has always been that healthcare is absolutely broken and that it has too much money being spent. And I'll give some numbers here for the US, but Brazil is actually comparatively very similar. In the US, we spend $3.3 trillion. It's about 18% of our GDP. And it's about 50% public, 50% private in terms of expenditure. I guess the country that's most similar in that to the US, it's Brazil. In the 50s and the 60s, we essentially copied the system in the US. So we have very similar problems: HMOs, uninsured people, lack of access, bureaucracy. I mean, I have doctors here in the US that are still using faxes and pagers. That's the norm. I can get gaming and entertainment more easily than I can get my healthcare. So there's a ton of companies to be created here. And if you look at the average for OECD, which are developed countries, they spend about 10% in healthcare. So it's not that the US is spending too little, it's that the US is spending in the wrong places. And in Brazil, that is actually the challenge also. We have a system that's designed for what we in Brazil call Classe A, Classe B. But if you look at the public system, the SUS, it's lacking. It's very, very lacking. So I believe very much in models like One Medical, or Doutor Consulta in Brazil, telehealth, remote patient monitoring, being able to take signals from noise, being able to analyze images from radiology and helping doctors do assisted diagnostics because there's a dearth of radiologists. Like, all of these are very valid models. But besides healthcare, I think that there's a lot to be said about just automation in general. If you look at making processes in factories, or making processes in kitchens, or making any kind of manufacturing more efficient, where labor is less needed, it opens up a whole Pandora's box that, oh, look, we're replacing humans with robots. That's not what I'm suggesting. What I'm suggesting is making labor more efficient with robots. It has happened in the Industrial Revolution, it has happened in the Agricultural Revolution, and it is happening right now, whether we like it or not. So I think the mission for entrepreneurs and for society in general is to embrace this and train people for these new jobs that are getting created. And what COVID has done, it has accelerated the adoption of all these trends that were already happening. Instead of 5 years, it's going to happen now in 5 months.
Carol, would love to have your thoughts on that.
Sure. So I think it's Marcos from Intel, right? So
Yeah.
Marcos.
You know Marcos, great.
Absolutely, I do. Hi, Marcos. So at Redpoint, we do not have a sector thesis. We look into everything. And what we believe is that, if there is a good person, a good people, good entrepreneur that actually believes in a thesis that aligns with our thesis, that makes sense for us to look into. Health is definitely a no-brainer. We have some investments such as Vitude, which is a marketplace of health, of mental health. Gesto, which has been reinventing the health insurance model in Brazil. Sami, which is reinventing the business as well, the health business. Memed with digital prescriptions. We have several of them, which is definitely it's a market that we believe is going to change. It's different from fintech. When we had fintech, and fintech was a big star in Brazil for a while, but the market is full of banks and fintech companies. So we tend to look into markets which have not been conquered yet. Health is one of them. I think that we also believe the fact that we're going to change our behavior after this crisis, and how we're going to relate to the material world. So are we going to, we talk a little bit about circular economy in the beginning of this conversation. I would like to get back to that. The fact that how are we going to relate to the material things and to clothing, for instance? Are we going to, if China reopened and everybody was on the Hermes line to buy a new bag or a Birkin bag, and are we going to do that? Are people going to do that? Or are we going to invest more in having companies such as one that we have in our portfolio, Repassa, which is a company that actually takes care of all the cycle of reselling clothing and apparel and some other things. So are we going to go through that stage. The way we relate to real estate as well is going to change, or has changed already. So, you know, when we were young, we wanted to have a house, so the American dream, right? We wanted to have a garden and a house, and now we just want to have the right to use a house. So behavior is changing. We need to evaluate that and look into the new markets which are going to open right now. There's a change coming, and we need to embrace that and invest in that.
Great. Well, we have time for only 2 more questions, but I would love to have everybody to comment on these last 2. 2 people are asking about the same question here in the chat by Mauricio Veiga from Meyer Brown and Sergio Salfates from Empirica. After the COVID, do you guys prefer choosing incremental innovation startups or disruptive innovation startups, and why? I would love to have everybody a quick comment on that. Rafael.
It's an interesting and fascinating question because it plays right into the investing strategy of funds. I mean, their funds are very much focused on what I described very early on, frontier technology, which I'll bucket it on the latter piece, which is not incremental in nature. Really is, I'll also distinguish the both geographies here, which I think are very important given the audience too. I'll start with Brazil specifically in the lens we look at Brazil and kind of what we look for there. I think there's certain businesses that work better in Brazil than anywhere else in the world. Well, they're solving very specific problems or nuanced problems to Brazil. And while we can argue those are incremental innovations, you can build very, very big businesses around them. Prime examples, XP, which is today a $20 billion market cap company, you could argue fits the first bucket, which is incremental innovation. Obviously, asset management is a pre-existing industry that has been around for quite a while. They innovated in the model in which they go about distributing products, the model that they go about, building the business itself, and you can have tremendous success doing that. I think GenPass is another prime example of that. I'll argue that even our investment in Loft is another very good example of that. So I think there is a lot of opportunity in incremental innovation, and at times, you're very quick to dismiss some of these things, but you can build massive businesses around it. And frankly, that's what we look for in Brazil. In Brazil, we do not have quite yet this notion around frontier tech. I think we'll get there eventually. Some of this is foundational in the sense of we don't have enough computer scientists graduating every year. We don't have that sort of foundation that's required. We don't have a Google or Facebook, but that is changing. That is changing very, very rapidly, and I'm very bullish that we'll get there. We're not quite there yet, frankly. And I'm not looking at Brazil through the lens of, I'm finding true technology innovation there quite yet. This is a sobering view. I do not want to say we have not seen. I mean, there's companies I've spoken to in the last, year that are doing things that are quite special from a technology standpoint. And this is true technology. This is not application software, e-commerce, or offline to online sort of things. On the deep innovation side, I think what we'll start to see is more happen there, but that will be mostly in the US. I think people have been talking about artificial intelligence and automation for quite a while. Here at Vulcan, some of the proceeds that we have from the investment side, we support a multitude of institutes that Paul Allen founded. One of them is the Artificial Intelligence Institute that sits up in Seattle. We have about 100 plus PhDs solely focusing on the advancement of artificial intelligence. These are the brightest minds, kind of an open science project focused on artificial intelligence. And we're so far away from getting to what real artificial intelligence truly is, that from an investing standpoint, we're not quite there yet. We truly are not. We can automate things, and I like to call it, people think Excel macros on steroids is artificial intelligence. That's not artificial intelligence. So nonetheless, I think my sobering view is I will continue to invest in things that are a little bit more incremental in nature, but I'll keep an eye out for things that are a little bit more transformational. With the caveat being, what's transformation is also a lot more binary in nature from an investing standpoint. Either it works and works phenomenally well, or it does not work. So it's really either 1 or 0, if you will. Whereas incremental is more of a lower beta sort of investment. Okay. So that's a long way of saying probably more incremental than truly transformational, but nonetheless, we have that bucket within our toolkit to do transformational things.
How about you, Carol?
From my perspective, I really, I would love to say disruptive, but it's really, I don't care. Incremental or disruptive, as long as it solves a problem somehow, or in inefficiency, which we have several in Brazil, and it can grow and escalate, I'm there. It's good for me.
Amit?
Yeah, I think both Carol and Rafael alluded to this. It's a deceptive dichotomy because you need both. And what is innovation? What is disruptive? What is incremental? I mean, that is also in the eye of the beholder. But it is true that when a crisis happens, it shakes up societies fundamentally. If you go back to previous crises, it allows for a flood of changes that creates conditions for companies to get created that may not have been possible before. So it does open room for more disruptive innovation. I do think the vast majority of innovation has been, is, and will continue being incremental, but the proportion of disruptive for some time does increase. At Tau Ventures, we are focused disproportionately on disruptive innovation. So we are bullish on the fact that we will see more companies that do align with our thesis. We invest in applied AI. We've invested in 3 companies that are focused on cancer, right? One company is focused on finding out drugs against cancer. Another one is focused on detecting cancer real time during colonoscopy. So we see more and more innovations like that will come. But just like any other investment manager, we have to balance our portfolio. We can't take too much risk. We also have to manage, create a diversified enough beta so that there's a mixture of both incremental and disruptive, however you define those terms within your portfolio. And that is dependent on each portfolio and each investment manager's strategy. So we are probably a little bit more weighted towards disruptive, and we continue being very bullish that will actually pan out. In fact, we think the crisis will end up accelerating disruptive.
And our last question, I would like for you to speak to the very early stage startup that are having to change their goals, they're having to change their approaches because of this pandemic. I read something that an investor, venture investor, Alex Lazarov, has said. He said, forget unicorns, startups should be camels. In this time of coronavirus-fueled uncertainty, startups should strive not to be like Silicon Valley unicorns, but rather like camels, surviving droughts and pandemics from the get-go. So would love to have your perspective on that, and thinking about the very early stage companies that are now suffering and having to make hard decisions. Carol, would you like to start?
So I don't think that all the companies that are unicorns right now, they actually they focused on becoming unicorns, and maybe becoming unicorn is not even the right metric itself, because you're being valued by what wow, I value $1 billion, but what does this mean? What do you want to be? Do you want to have more money? maybe in a unicorn, you're not going to have more money than if you are in a company and you have 50% of a company that values more than that. And you know, your participation values more than that. So it's very related. I really don't think that we have space only for unicorns in the entrepreneurs world. I think we have to believe that we have different spaces for everyone and for the wishes of everyone. So if you want to change the world, you might become a unicorn, but you might not. And it shouldn't be your focus or your objective. Your objective in general is different than that, right? So if you focus too much on becoming a unicorn, you're going to sweat it so much and you might not even get there. And is it that important? I think that's the question.
Great. Rafael.
Yeah, I think that's great advice, Carol. I think, you know, we live in a world that's so obsessed with vanity metrics, such as becoming a unicorn, that you lose sight of the mission of your company, of the culture of your company. You know, for our own set up portfolio companies, I think the most important thing is to be the owner of your own destiny. And the only way you can do that to a large extent is by creating a sustainable business and not being so fixated on the notion of becoming unicorns. There are a multitude of unicorns that ended up being zeros, right? So it doesn't necessarily mean that you reach success by achieving a certain valuation metric. I think success is building a sustainable long-term business that has an impact for your stakeholders, which range from shareholders to the economy, to your employees, to the communities you work in. And frankly, that's the most important thing, to build for the long term. And sometimes that requires taking very drastic measures in the short term during times like this, and letting, you know, advice that we give is cut deep, cut early, so you can be able to build for the long term. And as long as you have the long-term mentality, you build a sustainable business. And that's really the mindset. And us as investors, we have exactly that mindset. I mean, our founder built one of the most iconic companies in the world that changed the way we live. And he compounded his wealth and compounded the value of that company in a matter of decades. And sometimes people lose sight of that. You know, we used to this instant gratification, you lose sight of the long-term goal that you're trying to achieve. So my recommendation will be think long-term and really build for the long term. So I'll leave it at that.
Thank you. Amit.
Carol and Rafael have echoed many of my thoughts. I'll go a little bit more tactical here. We worked with our portfolio companies in anticipation of this crisis to make sure that they could overcome this, and really thinking about what will they look like 2, 3, 5, 10 years down the road. 80% of our portfolio had enough cash in the bank that they could weather the storm, at least for the next year or so. But 20% didn't. So for that 20%, we helped them think through really tough things. Who stays? Who should be furloughed? Who should have salaries reduced or deferred? Should you trade for equity and salary? Should you do X project or Y project? Should you stop hiring? Like, these are a series of many, many difficult decisions. And it's tough for any entrepreneur to make all those decisions. So we, as investors, feel responsibility to be their allies. The analogy that I've always had is the entrepreneur is the player, they're out there scoring the goals. I'm the coach. It's my job to make them as successful as possible. So echoing what Carol and Rafael said, we're optimizing for the full game. We're not optimizing for this goal or that goal or 10 minutes or 20 minutes. We're optimizing for the entire game. And you do go through ups and downs. It is very much part of a startup life cycle. So if you keep one particular objective, a very narrow objective in mind, that I have to have X valuation, I have to raise Y amount of money, or I need to have this particular logo, then you miss out on the entire game. Those are certainly part of winning a game, but that's not the only reason to be playing the startup game.
Keeping your goal on your mission. Well, Thank you so much. I'm sorry that we didn't have time to go through all the questions that we received. Hopefully, Amit, Carol, and Rafael will be back. Thanks a lot for joining us. A personal thank you for all you've done for the ecosystem. I know all the three of you are serving as a mentors to several entrepreneurs and really giving your mark in this startup scene. So congrats and thank you so much for joining us today. A lot of success to you and to the entrepreneurs that join us. I hope this advice has been of help to you. Don't give up, focus on your mission, and count on us to help you through this phase and engaging in more dialogues and more knowledge sharing through these amazing people in our network. Thank you so much and stay in touch. Obrigada. Obrigada.